I think this could be useful, an update of my current portfolio, and maybe there are some lessons and some answers that you can take away from this whole discussion. In a previous video, in April, that portfolio stood slightly more than $1 million, but right now, it's between the $800 to $1 million range. Of course, some values have come down, especially in the commodity sector. So if you're curious to find out what's the latest allocation that I'm seeing within my own portfolio, continue watching on. Hi guys, welcome back. Let's dive on to things. The smallest allocation that I have in my portfolio right now is into bonds. Currently, bonds are trending with the same direction as equities, and previously there used to be low correlation between bonds and equities. But as of now, everything is interest rate driven, the sentiment wise at least. So in my opinion, it's much better to be in equities than into bonds as of this current market climate. So I've actually shrunk my bonds within the family portfolio, and I've also fully sold out on the SIA bonds. Currently, the bond allocation stands at only 1.5%. So this is my free ammo, pretty dry really. Later I'll share with you my current cash balances. So stay tuned towards the end. So let's move on to the second smallest allocation in your portfolio right now. And that is actually into crypto assets. I haven't added into cryptocurrencies. As you know, crypto has crashed. I haven't sold out my Ethereum coins. But this looks to be a hard winter moving ahead for next few quarters at least for cryptos. So the current portfolio, which was in April 12% within portfolio, now has shrunk to only 6.4%. So this has been a hard journey in the crypto space. And I've also shared that I've moved it into a hard wallet simply because the lending platform that I used, I'm also concerned whether there are any counterparty risk or not, especially for this period. So hopefully when everything settles down a bit and there is less defaults within institutions, then probably I'll move it towards a lending platform again. My approach to buying crypto assets was always to pass it on to my sons. So I'll stick with that. And I do believe that this sector, especially Ethereum, would eventually recover. So let's move on to the third asset that I have within the portfolio. And that is actually Chinese tech. Previously, Chinese tech used to be about 4+% only, but right now it stands at 8.6%. I've added towards this sector. It's quite obvious. I've bought into Alibaba. I've stuck with my dollar cost averaging into the SIFE Chinese portfolio. So this has been the one that's been doing a bit better in recent weeks at least. And as of now, I still think it's a pretty contrarian play where hopefully most of the negative sentiment has run its course already. So let's continue to monitor this moving forward. And let's move on to the fourth allocation for today, which is into REITs. I have investments in SIFE REIT Plus portfolio. In my opinion, the SIFE REIT Plus is a pretty good approach to getting a broad-based allocation towards all of Singapore's best REITs. And if you're looking for a full tutorial, I'll leave links above. And in that tutorial, you'll explain that within the SIFE REIT Plus portfolio, they'll fix the dividend handling for you. They also fix any corporate actions such as rights issues for you. Within the entire REIT portfolio, I also have Escort Trust and I also have Mapletree Commercial Trust. And speaking to that, I've actually started selling down on Escort Trust. That's my own opinion. In any case, anything presented here, you take it with a pinch of salt. It should not be construed as financial advice. I've sold down on Escort Trust because I do believe the travel sector may be impacted in a recession climate. And Escort Trust has held its value pretty well over the last few weeks. So I've actually taken the chance to take some profits off the table. It is still a very well-run company and is right now looking at assets in terms of the student accommodation. And if you're keen, look for links above for a full tutorial of it. All in all, REITs allocation in my entire portfolio right now is 9.5%. Previously, it was 12.7%, but this is still a sector that I'm favorable at. I may add to this if opportunities arise. Let's move on to the fifth allocation that I have within my portfolio, which is into Asian and global equities. This constitutes 13.2%. Not much changes over here. This is my half of the family's portfolio and is allocated broadly across Asian equities and global equities, and it adopts an investment strategy that I also deploy for my own clients. With that, let's move on to the next allocation, which is also the second biggest within my own portfolio. Before I get there, help me smash the like button because it's taken a team hours to prepare this whole presentation for you. And as always, smash on subscribe if you like content related to investments. This second biggest allocation is into Singapore small cap stocks. Maybe at this point I can disclose a bit. A sizable portion of the Singapore small cap stocks is into Straits Trading. This is a company that is locally listed in Singapore. I haven't done a full tutorial of it, but a key subsidiary of it is actually Malaysia Smelting Corporation Berhad. I own both Malaysia Smelting Corporation Berhad and Straits Trading. Straits Trading provides a lot more liquidity and also owns assets in real estate. And as of now, it's still a pretty unknown stock, so if you would like a full tutorial of it, do leave in comment sections. Within my whole Singapore small cap allocations, I've actually made certain moves. I firstly sold out on Propnex, simply because I believe that property cycles are reached right now. I've also actually sold on the Hourglass. The Hourglass is a company that I've actually profiled before. If you're keen, look for links above. And this company is into luxury watches, of course. It seems from preliminary data that the trend of luxury watches may have peaked. And as always, luxury is something that's a bit further from everybody's mind if there is really a deep recession. So I've taken a chance to take some profits from there also. So the total allocation towards Singapore small caps is about 24.9% currently. Some other stocks I own have been covered on this channel before, and they include Baosteed, Kim Lee, and Hobie. Now you notice following to here is that I've left out absolute numbers because I don't want to be construed as a buy or sell recommendation. So I put my own approach for you to look at and see what you would like to adopt for yourself. And with that covered, let's move on to the biggest allocation, which is still commodities. The total allocation for commodities have actually increased from April all the way to now. I've actually bought during this entire period, and doing this whole accounting exercise has really showed me how much exposure I have and how much risk I can take on more. As of now, this is a big over allocation really. And just to share a bit, if you're new to this channel, I've allocated towards palm oil, and also into tin mining. The companies, of course, you should know already. Speaking to here, I would like to reiterate again, commodities are an extremely volatile sector. With the risk of recession looming large, I've also covered in a previous tutorial that prices could suddenly collapse in a few quick months. But why I've held on is a simple fact. The long-term supply-demand dynamics are strongly favorable. The entire bull run for commodities is far from over in my opinion. So I'm still very much on board the commodities super cycle. So let's recap together. What I've sold out is actually on bonds, Propnex, the Hourglass, and Escort Trust. I've bought more into Chinese tech, palm oil, and tin mining in this period from April to July. The total net ammunition I have left in cash and SRS is about 8 to 10% of the overall portfolio. So the war chest cash is getting a bit thin, which also means that I really do need new income to fire a bit more aggressively on markets. And that's my current position. But so look at your own situation. If you're underinvested, look for opportunities to get invested because the bear market is where you actually build wealth. My current position now is very invested really. This ammunition is meant to be deployed, and probably in a couple of weeks or a couple of months time, I might start firing them off already. So with that, thank you for watching till here. Leave any questions you have in the comment sections. And if you haven't checked my April edition of how I've allocated my own assets, follow this video link above and I'll see you there too.